Let's talk about 5 stocks that have been predicted to 2x or 3x in 2024 and outperform the Magnificent 7. Do let me know in the comments if you own any of these stocks already or you are considering adding them to your portfolio. But if you are considering making investments, check out the link in the description below for a free share worth up to £100 to get you started. The Magnificent 7 should be a part of most people's portfolios, according to Deepwater Asset Management's Gene Munster. But he is now saying that the real growth, the real opportunity is moving from those Magnificent 7, like we saw in 2023, into sub-50 billion market cap companies. He's saying that a selection of these mid-market cap companies could provide investors a 2x or a 3x opportunity over 2024. He's actually predicting a major AI bull market, and he's likening that to the 1995 dot-com era, saying that there is substantial growth opportunities ahead. But let's actually now talk about which 5 stocks in particular he is pointing out. The first one is CrowdStrike, ticker symbol CRWD. CrowdStrike is an AI-powered cybersecurity company known for providing cloud-based services for protecting against cyber threats. The company's flagship product, called CrowdStrike Falcon, uses advanced threat intelligence and endpoint security to detect and respond to cyber attacks. And it's still very early days for this company. They only went public in 2019. Something to point out about this company is that they have a very, very strong dollar-based net retention rate of over 120% since early 2019. This indicates consistent sales growth from existing customers. This means that they must be providing real value. And they are financially pretty robust too, with a substantial cash reserve, and they managed to grow sales by 34% year over year in Q3. And then looking to the future, they are predicting, along with many analysts, that they will continue to see very strong performance. And actually the future prospects for this sector in general, cybersecurity sectors, cybersecurity companies, does look really promising and really positive. This is of course because there is an increasing amount of data. There is an increasing digitalization. And with this comes increasing complexity of cyber threats. Therefore, the demand for cybersecurity is heightened. If we just look on Seeking Alpha here, which by the way is the platform that I use for all of my stock research, it's absolutely fantastic. And they are actually offering a New Year sale right now to anyone that uses my link. I'll leave that in the description below. If you use that, you will get 30% off plus a 7-day free trial so you can make sure that you like it. Anyway, they have loads of fantastic features on the platform, but one thing that I really like to look at is the financials of any company before I invest into them. Of course, I don't have time to go through every single thing that comes up today, but just having a look at the total revenue here and the revenues for CrowdStrike, we can see that they have been growing at a very decent rate. And if we go over to this section here called growth, you can see that revenue growth year over year is coming out as being rated an A, the second best that you can get, with 39.94% revenue growth year over year, absolutely fantastic. And then the forward revenue growth as well, an A, 39.42%. Now let's see how they've been performing compared to the index. The S&P 500 index, of course, the 500 or so largest US companies. Year to date, absolutely outperformed the index and then some. CrowdStrike have returned 149.15% year to date, whereas the S&P 500 25.04%. So if you were an investor purchasing CrowdStrike back in, early this year, you have had a fantastic return. Let me know if you're one of those investors in the comments below. The next stock is Palantir. This stock is actually my second largest holding in my personal portfolio, and it's one that I cover in depth on my main channel, which I will leave linked here or wherever on the screen now. They are a company that specializes in big data analytics, but as time goes on, they are integrating more and more artificial intelligence into their solutions. They basically have a variety of different platforms, different software solutions that they then give to their customers, both government customers and commercial customers. And what those allow the customers to do is to actually bring all of their data from many different sources into one centralized location. And then they enable those customers, those clients, to understand their data better, which then of course improves their businesses, top line, bottom line, saves lives if they're working with healthcare providers, it does a whole lot. But like I said, I cover this stock way more on my main channel. And they are now becoming one of the prominent AI players in the space, especially after the fantastic year that they've had. And many people, retail and institutional investors, are now paying attention. One thing I like about Seeking Alpha is this ratings summary section. Now, of course, never just blindly invest based on this, but it's quite interesting to see what different analysts are thinking about particular stocks. You can see here that Seeking Alpha analysts are rating this as a strong buy, Wall Street as a hold, and Quant as a strong buy, with these scores down the side here. Going over to the financials sector now, you can see that their revenue has been increasing rapidly. They've been doing really well, and actually they are now eligible for the S&P 500 index because they have proven gap profitability. We don't know when that S&P 500 inclusion is coming. We are expecting it early 2024. But only time will tell, I guess. Looking at the earnings section here, you can look at the numbers, but I will tell you now that they absolutely smashed their Q3 earnings for 2023. Really good earnings. And from that point, the stock price started going crazy. Having a look compared to the S&P 500, again, like the stock before, absolutely outperformed the index and then some, 173.4% year-to-date returns for those investors, compared to 25.04% that the S&P 500 has given, which is also a really fantastic year for the S&P 500. But it goes to show you that some of these AI tech stocks have had a fantastic run, have really had a good run this year. Actually, over the last 1 month or so though, Palantir has been falling in stock price, probably because there's been some profit being taken. Maybe some investors are getting a little bit bored as we haven't had as many catalysts, but I still think this is one that you should definitely look at. Not financial advice, just what I'm doing. I'm definitely holding this stock in my portfolio. The next stock on our list is Zillow. Zillow is a leading real estate and rental marketplace, primarily operating in the United States. They provide an online platform whereby users can browse real estate listings, both for sale properties and for renting properties. This isn't a stock that really has links to AI like the other two. So why is this being deemed as a stock that has an upside of 2x or 3x? Well, I think this one is more due to the macro situation. With interest rates now holding and expected to come down in 2024, the macro seems to be more favorable. And actually, Zillow's stock price soared by 23% just based on the news that there was planned interest rate cuts coming. This is because investors know that this should really impact the business positively. And they've actually had a fantastic year to date so far, but they are still down by over 70% from their all-time highs, which we'll look at in just a minute. Something that investors considering this stock should know is that they are working on a super app, an end-to-end platform whereby they want to facilitate seamless real estate transactions. And that right there does show some of the innovation that this company has. As you can see here, revenue has been a little bit all over the place. Some year it's increasing, other years it's going back down. So I would just say that if you are potentially adding this position to your portfolio, do a deep dive, have a look into all the financials and just make sure that you are not taking on any unwanted risk. And likewise, as expected, the revenue growth year over year and forward revenue growth isn't looking too positive. That doesn't mean that there's not opportunity here. You just need to do further research and actually look into this company, see what you like, do the rewards outweigh the risks, so on and so forth. Year to date, Zillow has outperformed the S&P 500, but not to the same degree as the other two companies, Palantir and CrowdStrike, have that we just looked at. But still a fantastic return, 76.57%. Next up, we have Etsy. Now, I'm sure everyone watching this video has heard of Etsy or even used Etsy before, but they are basically an e-commerce platform that is very focused on homemade or vintage items and craft objects. So they want customers to come to them for their more special gifts rather than the mass-produced ones that you can get in any store around the world. Now, Etsy has been experiencing some slower sales growth, but they have seen that, they understand that, and they've decided to actually shift their focus towards efficiency, which is always good for a business. Investors don't want to see a business doing badly and then the leadership not doing anything about that. So it's actually way better to see what they're doing to try and help themselves in the future. And one thing that they've been doing is reducing their workforce by 11%. Etsy have had a little bit of a journey. they've been a little bit all over the place because during the pandemic, the sales absolutely took off. They soared to 1.7 billion in 2020, which pushed the shares up to $250 in 2021. But then there was a little bit of a growth slowdown in 2021. There was still growth there, don't get me wrong, but it was at a much slower pace. But then in 2022, revenue growth further decelerated to 10%. And so far in 2023, I guess the word to describe it is stagnant. Not a lot has really been happening. They've had decent sales growth, they've had stable revenue, but it's all just been a little bit stagnant. I don't know what other word to describe it. And what I've just been saying shows up on their income statement. You can see 2019 to 2020, fantastic revenue growth. And then it's sort of decelerated and it's not been doing so well ever since. But I guess we do expect that given what happened in 2019, 2020, and many different stocks have had a very similar picture. Revenue growth year over year is being rated as B- at 9.58% and revenue growth, forward revenue growth, B- 7.45%. So if you compare this to some of those big tech companies, very different in terms of the forward revenue growth. Year to date, Etsy has actually underperformed the index, down by 27.45%. But let's just expand this out to a 3-year period. Yet, 3-year period, again, underperforming the index. We'll go out one further just for good measures. Doing a lot better, 74.42%, but still underperforming the index. Will 2024 be the year that Etsy actually outperforms the index? Let me know what you think in the comments below. As a consumer, I actually really like Etsy and I use it about twice a year. But as an investor, this is not a stock that I'm looking to add. The last stock on our list today that Gene Munster is predicting will see a 2x or 3x upside in 2024 is not one that you may have actually heard of before, and that is Redwood Materials. This company, interestingly, was founded by a former Tesla executive, and they specialize in recycling lithium-ion batteries, which is of course an area that may be in higher demand as we continue to see the adoption of electric vehicles. This company is not yet public, meaning myself or you retail investors, we can't really make a position in this stock right now. However, this may be a sector that you actually want to look into. Now, I'd love to hear your thoughts about the stocks discussed in this video in the comments below. Stay tuned for the next video. But until then, keep analysing and keep investing. And don't forget to hit that subscribe button.